everyone, K-Kim here. Today's May 5th, 2017, Friday, midday here. Market should be open another 2 hours and a half as I produce and record this video. Hope you guys had a good week trading. We're going to be looking at S&P 500 ETF SPY, Russell 2000 ETF IWM, banks, XLF. I do want to look at a treasury bond today, TLT, and we'll look at silver, gold, and GDX and call it a night. So looking at Spider here on the daily chart, we've been consolidating here and we just kind of slightly gotten up here. It's kind of funny if we actually go to line chart like this, you can see that we are actually just kind of cultivating this tiny higher lows and higher highs in this micro level. So we have this micro level trend development here, slightly higher lows and higher highs. I guess it is depending on how we close, but if you really want to micromanage this and you really want to see where the market possibly heading early next week or Monday morning, is you want to see, as far as the sentiment is concerned, you want to see this thing stays above 238.93. I think that then, staying above these highs could possibly give a bit more, bullish sentiment, micro term I'm talking about, going into early next week here. But, looking at more of a bigger picture, obviously, something that I've been talking about is that as long as we keep these gaps open, we have this gap here, we've been talking about this gap for weeks now. As long as these gaps stays unfilled, it will favor the buyers, right? So doesn't mean just because these gaps get filled, it's going to become bearish. And obviously, I think the worst case scenario, we may come down to 236.34. There might be some shakeout. I will be still open to that. But as of today, the gaps are unfilled. 20 EMA. You remember this 20 EMA, this modified 20 EMA I talked about since late April here? Well, that 20 EMA has been, it has an impressive resume, meaning it has been a strong support here these 2 days back in early March, and then it kind of flipped bearish and then started acting as strong resistance late March, early April, right? And then just a little bit of resistance here April 20th, and then we just gap that up. This is what I call jumping over the fence. A lot of times when the buyers don't want to deal with this, a lot of resistance here, just gaps up above this level. And then we've been consolidating here last week or two. And guess what? We found support yesterday and found buyers that are in that vicinity of where that 20 EMA is residing. And 20 EMA is now moving higher. It is moving higher. It is not trending down like it did here. It is moving higher. What does that mean? It means in the minor term, sentiment is bullish. Okay, sentiment is bullish. As long as we have a rising 20 MA, the benefit of the Dow in the minor term goes to the buyer. Doesn't mean it's not going to see a shakeout. Doesn't mean it can go slightly below, right? Just do a quick lesson here. You see that rising 20? Do you see this rising 20? Do you see that 20 never flips lower or never curls down? It continues to rise higher. I mean, the price gets slightly below it here, here, and here. But the sentiment of the market, what do you say? Bullish. Minor term sentiment is bullish. What does that mean? Benefit of the Dow goes to buyers. And this was all through December, January, and February until that 20 MA start to curl down, which was here. But this time, it has never curled down. It was always up. That's why we've seen these shakeouts, but the sentiment was bullish, and a lot of bears got trapped here trying to short this. And obviously, been a very tough market, the shorts and bears. And right now, that 20 MA is rising. So let's give benefit out to the buyers in the minor term. Let's go to Russell 2000. Russell 2000 did see let me adjust this real quick here. Let me just make it right. That's where we found support. We did fill this gap, but these gaps still remain unfilled. So we still have that bullish catalyst from that gap that was unfilled. If I actually do a little bit of Fibonacci, this is exactly where it came down to 50% retracement zone. Right? Do you see that? Let me remove some of these. So, top of the move, the low of the month in March, got up, came exactly to 50% retracement, found buyers. That's the level coinciding with the gap fill. And then you see these long wicks. Lower wicks, last 3 days, last three trading days. A lot of buyers here. There's a lot of dip buyers here, right? Obviously, I bought my dip a little bit early. I bought it around 139-ish right here in that vicinity. I thought this level might be the level to support, like right the first level, this level, right, which is coincident with the 20 MA. But currently, the market decided that this is a level, the gap fill level, these resistances, and that's what we're seeing last 3 days here. And obviously, let's be fair though, it could be a bear flag, right? As far as the trend is concerned, we're still minor term trend, a micro term trend we're still down. This turned out to be a bear flag, and this could potentially be a bear flag if we do see a flush to the downside. But like I said, we do have a strong support here, 137.13-ish, which is we just filled the gap. We are seeing some dip buyers coming in that vicinity. That 20 MA is kind of moving sideways. So kind of a neutral zone here in the minor term. If this thing starts to get up though, and once you see these, these hammers get confirmed, I think that there's a good chance we come back up here and then maybe do something like that. Right? So it's kind of see what happens next week. I think we'll have better, clear, more lucid idea where the Russell is going in the minor term if we do see a follow through. So these hammers, they need a follow through, otherwise they're just going to become potentially be just bear flag there. So we'll go from there, see what happens next week. Financial sector, banks been still kind of struggling to get above this downtrend resistance that I've drawn. We attempted to move higher, we fall right back in. And I think a lot of people are still watching this as a left shoulder and head, right shoulder. We are building something though. If I actually go to 65-minute chart, you can see where, if I just move this right there, does this look familiar? Right? Something is brewing here. If this thing this is potentially inverted head and shoulders on this 65-minute chart. If this thing gets above 24.01, that will be initial confirm. That's a neckline, so that's the level to watch. If we get above that, there's a good chance that this thing flies up to about 24.79 here. So that's the level to watch. And even just looking at daily chart, we might, actually if I go to line chart, it'll probably look more like it. You can see that right there. See, that's the left shoulder, that's head. And that's kind of what happened right here. We got the left shoulder, head, right shoulder, neckline, broke above, flew, right? Neckline, left shoulder, head, right shoulder, break above, possible fly, right? So we'll see how it plays out there. We need to see this thing getting above 24.01. We'll look at it next week and see if we can, what happens next week. We'll kind of follow up on this going into next, when we talk about, when we do, this market update next Friday. I want to look at Treasury bond. Never got into any of this position. I just didn't like this breakout, especially, I thought that the S&P 500, and because of the Treasury bond, S&P, they kind of have this inverse relationship, not like every move, but overall, and, when this was happening here, let me just do a quick comparison. I think that might be kind of fun. Let's do TLT. So if I just kind of do this, you can see we kind of, it like pulled back and then like Treasury bond went up, right? and then like spider went up, and then you can see treasury bond pull back. Right? You can see that how the inverse relationship you see. Got up, came down, right? But if you want to look at, a lot of people think that, well, because of treasury bond is ready to move higher, does that means, the equities is ready to tank? It's not always true. There are times where they actually move higher together. How are you going to explain this move right there? Pretty much spider, treasury bond moved higher together. Like in that vicinity also, you can see treasury bond and spider moved higher together. So just because treasury bond is extremely oversold, I think there's a good chance we might come back down to 115. And let's say if this thing starts to rally, right? I wouldn't be like super bearish in the market, thinking the market is going to crash because of treasury bond, which I've just demonstrated to you that they can move together. But looking at more of a minor term though, in minor to intermediate, they've been having inverse relationship. Right now the problem is if this becomes a bull trap, which could be likely because we're something that I talk about traps, that I've been telling you guys that there's more likely more bull traps if this is in a downtrend. If this is in an uptrend, there are more likely more bear traps. That's why you see more bear traps on S&P 500 because we're on an uptrend. But this has been a downtrend, and because we're still below these key moving averages, this is more likely a bull trap, right? And also looking at a daily chart here, potential left shoulder head, right shoulder on top of this head fake there. If this thing loses this 50 MA, which is coinciding with this neckline, there's a good chance this thing coming back down. I'd be interested to go long on this around 115, 114, 113 in that vicinity. Around 114-ish. I was generally interested in going long on 115. And I talked about it, I think, months ago when we talked about treasury bond. I thought there was going to be one last shakeout before this thing finally bottoms. A lot of times, there's so many traders who wants to quickly call this bottom, like, oh my God, we just broke out of this, and quickly getting out of this or getting into this. Sometimes it works out though. Sometimes I've seen plenty of stocks that just clean. It breaks out, it just goes bam. But there's many times what it would do is it would just do one last shakedown, even to the lower side, like in both direction, where like it will make new low, where trap the sellers, will trap the buyers here, trap the buyers there, trap the sellers, and then it finally bottoms. I think that's kind of possibly what's happening here in treasury bond. Let's go to silver, gold, and GDX, and I'll end the video. The problem with silver is this. I can just really kind of, I've been talking about this every time we talked about silver and these miners and metals, talked about this. This is a primary term downtrend resistance. As long as the price is below that level, shit like this is gonna, sorry about my language, but crap like this is gonna happen. And I haven't touched metals and miners for a really long time now, and I probably won't for a while. But I don't even want to short this. It's just now potentially this inverted head and shoulder is time to get nullified. Now this becomes a double top. This is a neckline broken, and this just downright tankage. If this thing gets below 14, there might be a gap fill here, and probably we're gonna see some short-term bounce in that vicinity. Especially it's gonna undercut this low and fill this gap. Probably gonna be some kind of bounce. But let's say we lose 14.65 and gets below it, man, it's gonna be very, very tough for silver investors there. Let's go to gold. Same thing. That long term. That's why you respect these long-term downtrend resistance. We're still below that downtrend. Lower highs there. So primary term perspective, we're still in a downtrend. And let me just get rid of this. That's where it exactly found resistance. Just was not it. Because remember we talked about 124.67. I talked about how I won't be interested in going long on gold until it gets above 124.67. And even I said I don't want to go long right on breakout. What I would want to see is getting up, coming down, and then I might be interested in some of these levels. But now that downtrend resistance act as resistance, this thing just tanked since then. I mean, looking at more of a minor term, we do have potentially higher lows, higher highs. So GLD looks a little bit better than silver, looking at a minor to intermediate term, but it's a serious problem here if we're not able to get back above 124-ish. Let's go to GDX miners, and we'll call it a day. Miners, we didn't even, I mean, these GDX didn't even got back up to this downtrend resistance. Remember GLD, GDX got up there, at least able to get all the way up before pulling back. Well, GDX has not able to even get up there, and it prematurely fell. Now we kind of cultivated this lower high and lower low. We do have a kind of a still a formation of an inverted head and shoulder. We've got left shoulder head. If this becomes a double right shoulder and then get up. But again, I won't be interested in GDX, going long on GDX. I'm talking long term, investing in GDX until this thing do something like that. Have a wonderful weekend. Good luck trading next week. We'll talk on next Friday on the market update.